Hello everyone. Could you just let me know if the sound is good? You can type in your answers in the chat window for the trading view under my room. Does it sound okay? Can anyone help me out with that? Okay, sound is good. And I will share my screen and make sure that is okay. And then we can get going with our material for this evening. So I'm just going to arrange now to share my screen. Okay, so you should be able to see the screens shortly as well. Just let me know the screen is good as well. Can you see my screen? Okay, that's great. So let's get going. First of all, welcome all. Thank you all for joining me. I certainly hope that there will be some interesting material that you will learn. And even if it doesn't necessarily help you out in planning your directional trade in specific terms, at least you will get a grasp of what might be in store. And then hopefully you won't be caught completely off guard. So thank you for that. And I will begin with just encouraging you all to go to my website, which is currently just very basic, and there will be some additional features uh, which will be added in due course. But uh, if you go to my website, which is that one here, so you're under the danv-charting.com, you can register name and email, and that way you will be kept updated with anything that I publish, which will be, uh, generally intended for circulation in the public. There are other services that I will be planning, and in particular, my passion is to form like a private group of individuals who wishes to trade options for potentially big return for relatively small risk. That doesn't mean to say that, of course, the risk will be taken away, but in terms of the unit of risk that you take, there is potentially many multiple of profitable return in the trades which are not necessarily short term. These are long term trades. So, you will hear about this. So, first thing to do is to go and register on this website. Second thing is to just ensure that you are all aware that there is a disclosure or disclaimer, and that is, of course, the material I'm presenting is not specific advice. It is generally intended for educational purposes, and that all market, no matter what financial instruments you trade, obviously, as you will know, carry risk. Some of them carry great deal of risk. So anything that you do and you act upon should be entirely based on your own decision and not necessarily because of the thing that I say here. Although you can take it in as a part of educational element for you to help you in your growth as an investor and as a trader and as a chartist or analyst, and also to ensure that you know that I'm not regulated by any government agencies under any jurisdiction. So I've no license to advise anybody, and I will decline to give any specific advice, but I will talk about charts and I will talk about my thoughts. So with that agreement, we'll proceed. First of all, before we continue into the main material, you can follow some of my charts in the main landing page on the trading view, and you will also find similarly on the home trading view many other people who post these charts on different markets. So that would be useful if you are interested in alternative markets. But there are also individuals who post a lot of charts on Bitcoin. So I'm sure you're familiar with that, but this is just for individuals who might be relatively new to TradingView. So let's get on with our material. We are going to look at a chart on a big term initially as a background, and from our previous videos and sessions you will be familiar with this particular chart. You must have seen this now many times, and for those who haven't, I have started off this chart by assuming that the price came up from lower levels and made this particular top somewhere here, because on a Bitstamp we don't have a lot of price history, but the Bitcoin I gather started off from probably early, even 2008, 2009 maybe, but certainly 2010, 2011. So we have no idea just exactly how price have progressed into here. Now I know there are individuals who have spliced the price chart of MTGOX and Bitstamp to try and generate a chart history that goes beyond the one that I have here on this chart. But over a longer term, it is still difficult to know just exactly how all of that would relate to this particular potential high in the price chart on my screen. So we'll have to make an assumption, and this is the assumption that I have continued to work this chart upon, is that whatever it was that came up from there formed a larger degree cycle 1, and then larger degree cycle 2, and then currently we are in larger degree cycle 3. And within that, there should be 5 waves, which now is annotated by pink in parentheses 1, 2, 3, 4, and currently we are, I think, in a corrective 4. So Bitcoin history doesn't take us, certainly in terms of this chart, or even if you include the MTGOX, it doesn't take you much beyond 2010. So it's relatively still new instrument to chart and to get to know the characteristic and overall way we are in the cycle. So what I find is when I interact with individuals in the TradingView chart, and also when I publish my charts, I find that many people are almost wired to be bullish, and they are expecting this price chart, for example, never ever to come down. They're expecting this price chart perpetually to keep going up. So they are 100% wired to go up. And until I'd say probably early 2014, many people even refused to consider that we could come down and make a large correction, whether that will be sideways or whether it will make significant lower lows in the process of correcting. Many people refused the potential of doing that. In fact, this dotted line you see was a line that many people focused on and said that that line will not ever break. So now that is broken, some people have now probably jumped the fence. So we have now 2 groups of people. We have still a very large, significant large group who still are perpetually only talking bullish, And there are some small group individuals now beginning to entertain that maybe we will go down, but those individuals are so bearish that almost make me feel a little bit nervous, because they're now perpetually wired 100% to go down and just keep going down, never ever to hit a bottom. And I think either of those is not necessarily the view or approach that any mature chartist should undertake or adopt. Money is not made necessarily in getting the directions right. Money is made in identifying a safe and correct level to enter in, so that you are able to have a relatively high uh, confidence trade, whether that would be short or long, assuming, of course, you are not trading very, very short term like scalping, in which case, general trend really is immaterial. If you're only scalping for few, maybe over a hour or 2 hour, and you're only looking for $10 and $5 and that sort of thing, then really a general trend is of no real consequence. But if you're looking for trading something big, you know, in which case, when you're uncertain, you'll be out of the market and you'll be looking for correct opportunity that might come, after a few weeks or maybe even a month later or longer. But you're waiting for that, and you'll wait until it lines up, and then you can be confident that now you'll be entering the market and you'll be looking for significant ride. So for those kind of things, the larger trend, of course, is very, very important. And the comment I was making about these individuals in the chart who either perpetually wired to be positive, or now some individuals have taken the other view of wired to be constantly negative, doesn't do a service to that individual, or in fact, when they continue to express such a view with a view of almost like abusing somebody, or poking fun at somebody. And just to illustrate, we had somebody who commented on my chart, and from the comment that he made, he wasn't really very considerate. And for that individual, to be fair, I have no idea what background he has, how long he has been analyzing, charting the market. And so, one doesn't know where he comes from. But when somebody makes an attack on somebody and provides very little alternative to go by, then it doesn't do any good to that individual, even if he proves to be right, and he doesn't help anybody else either. So, when you look at something like this here, now I see, when he made a comment on my chart, now I see where he's coming from. And in fact, individual like this almost exposes themselves as ill-equipped, with very little knowledge, and just trying to sound very big. So, I certainly hope that this particular individual makes lots of money. And from the comment, it appeared as though he is very, very bullish. And I can see from this chart that was shared in the general chart today that he is very bullish. But if you look at it, in fact, there was a larger time. Yeah, I think this is where he starts from. So he's had November high, and then he has labeled this first decline with a low round in April. He's labeled them as 1, 2, 3, 4, and 5. And then he's labeled them again 1, 2, 3, 4, and 5. And then on this decline, he's got 1, 2, 3, 4, and 5. And now he's gone back again 1, 2, 3, 4. Now he may well be right. I'm not saying he's wrong, but I'm just looking at this, and to me, it appears as though he doesn't really have a grasp of Elliott wave. He has gone into great effort of actually producing this chart, and probably, taken on some willingness to share his analysis. So he's then given this chart here, which takes a bit closer look. I think it's that one, or this. Yeah, that one, it gives a closer look. So this one here, he is focusing on is this part. And again, you can see in here that he's got 1, 2, 3, 4, and 5. But what should follow after this 5-wave move down? What should follow? Should it be 1, 2, 3, 4, and 5? But where will it stop? Will it stop here? Or will it, we have now from there, we'll get another 1, 2, 3, 4, and 5. In other words, will we just continue to get repeating 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, in no matter which direction you go into? Will we do that? And then he tried to illustrate that even on a more close-up view, that's where we are. So if this particular analysis turns out right, that's fine. But I'm just looking at this chart, and I think he does obviously not have a grasp of Elliott wave. And the reason why I say that is because Elliottwave International, from whose publications I have extracted some of this material here that you see, these are basic chart pattern. And the basic chart pattern is made up of 1, 2, 3, 4, and 5, which is like an impulsive wave in this particular direction. So in this chart, it is moving from the left bottom to the high on the right hand side. So it's a bullish 5-wave move up, impulsive. But once that 5-wave move completes, then you should have ABC, and this ABC should be like a zigzag as one possible outcome of the corrective wave. But generally, the schematic diagram always suggests that we get 1, 2, 3, 4, and 5 in a bullish move. Then you get counter move, which is A, B, and C, which is basically a 3-wave. So it's a zigzag. And within this wave A, of course, many of you will now get to know that you will have a minor 5-wave down here, possibly. Then you get a minor ABC correction back to wave B, and you get another minor 5-wave correction within this. So you will get 5-wave in this cycle and that cycle, but overall, it will be ABC. So once you complete that, then you'll start a new cycle of 5 waves joining from here, going up, okay? But we are looking for correction. So what kind of corrections can we have? Because in essence, when we are looking at the period where we are now, we are in a corrective zone. So we want to try and ascertain what are different types of correction before we come on to where the market is now. So when you look at different corrections, ABC, zigzag, is one correction. And within that ABC, there are times when this ABC actually completes double zigzag. So you'll get a minor A, minor B, minor C within this wave A. And in which case you complete them and they call W. Because when you have ABC, it's a complete cycle. And the wave C must have 5 waves, like here you see. You got 1, 2, 3, 4, and 5. So even if this one here did not have 5 waves, wave C must always have 5 waves. That's one of the rules. So here, the schematic diagram the author is suggesting is you get a 5-wave to wave A, ABC retracement, 5-wave to complete a second cycle of this first zigzag. So he's calling this W. Then you got ABC going back up, and he's calling, because this is W, this becomes X, and he's got another ABC coming down. So this now, they call it like double zigzag. Okay, so we have a single zigzag, we have a double zigzag, and then from this double zigzag, you can have several combinations. One of the combination is that you can have what is called a flat. A flat basically is A, B, and C. So instead of one where we have higher high and higher, lower high and lower low sequence, we simply get highs and lows, broadly speaking, horizontal. And the other part of this you get in this wave A down, you get a zigzag. Going back up, you get a zigzag. But then in a wave C, you must have 5 waves. So in this flat, when you look at it a bit closely, this is the kind of pattern you'll see within this. So this is called a flat. And then the alternative to this flat is expanded flat. And what happens in expanded flat, in fact, if I can, this one here, what happened in expanded flat is, see, the wave A started from this level. And you can see here, wave B just gone back to the beginning of wave A, which is in a flat. But in expanded flat, you get wave B goes much beyond the origin of wave A. And then wave C goes much beyond the origin of wave B, where the point A is. So it goes beyond that. So in other words, this leg and that leg expand. So here, if you can stretch this out and stretch that out, then that is become an expanded flat. And when you look at it in closer details, again, you'll see something resembling this, except that that point and the bottom point is stretched in either direction. So it's called an expanded flat. And then one variation is a running flat. So these are three different kinds of flat where we don't quite see ABC zigzag. We see a lot of horizontal movement as it begins to correct the impulse 5-wave move up. So we could have an ABC after the 5-wave move. We can get double zigzag within that ABC. We can also get a flat, either a flat with just sideways, with highs and lows, almost horizontal line at the top, horizontal line at the bottom, and then expanded flat where point B goes much beyond where it normally expected, and point C goes again much beyond the point A here. So that's called an expanded flat. And then one of the other combinations you see is this kind of triangle. So once you get this jigsaw puzzle, and it's almost like a, I mean, it seems simple, obviously, because it's a schematic on a piece of paper. When you look at it in a real price, it's not always that easy. However, this is the concept. That's a concept you have to have, and you have to then accept that we will get either a zigzag like this, we'll get a horizontal flat, or we'll get an expanded flat, or we'll get some kind of a triangle. So which one of these is going to be? So then it's almost like if any of you have played the Lego games, then you get different pieces, you assemble them together, and certain pieces are better in certain positions, and you begin to then build a model. So this is like building a model. Okay, so when somebody is looking at labeling an Elliott wave, like the one individual who did here, he obviously lacks the experience of knowing what the Elliott wave is. And this is the danger, because many people either are poorly informed about Elliott wave, and they simply start putting waves on, and they think they've got it. And then when they don't find this market play out, then they begin to poke fun at this particular form of analysis, saying that it doesn't work. Or other people who are already dismissing Elliott wave will say, well, look, he said this. And even myself, I have, for example, published many charts, as you'll see in TradingView here on Bitcoin. Some of them have not really panned out. Like this particular chart, I was expecting another high. We never got it. Instead, the market just continued straight down. Now, people say, well, see, that was wrong. Well, as far as I'm concerned, I don't think I was wrong, because I was expecting a sort of pattern which would have given me to believe that we've completed the correction to the upside and we should then be going downside. However, this one morphed. But my overall bias was that either we have a top at this level here, around 670, or we might poke up to 700 or even 750. But in a bigger scheme of things, it doesn't change anything. The overall expectation is that we would be capped. Basically, the upside would be capped, and we should be then getting a significant downside. Now, it appears that that pattern hasn't quite played out in the way I was anticipating. But at least I have not been caught on the wrong side. That's the beauty of this form of analysis, is that you are not completely wrong on a wrong side of the major trend for too long. Okay, so you will see some of the other charts that I posted, like this particular one, for example, was slightly similar to the one you see here, but we see now that one is now coming down. But even though it's coming down and we are getting it quite right, I still don't think that we followed the path I was expecting. So you first of all start off with a premise of what you think is happening, and you begin to isolate what things you will want to see in order to help you confirm your expectation. And then once it begins to fulfill your expectation, then you will know that your analysis is correct, or you will reconsider. So this particular pattern, I was expecting a clear 5-wave decline. Now, as you know, we've not had a clear 5-wave decline. So even though my directional bias has come out right, but the pattern, this particular 5-wave cycle I was expecting, hasn't come out right. So whilst I'm entertaining that, I would be now looking for an alternative. And that's where we are going to go into in a second to show you that. And of course, the other thing to remember is there are some in the Bitcoin community which I have often said are very experienced, IT, um, uh, IT experts in whatever form, whether these are programming or hardware or whatever it is. To them, um, the science behind Bitcoin is almost like a second nature. Just like to me, Elliottwave Wave is akin to my analysis. So for them, uh, science behind the Bitcoin and whatever goes behind the Bitcoin is almost like second nature for them. So for them, they get ahead of themselves and they think they know it all. So many of them were, for example, saying that when I was expecting a price to bottom here and instead we went up on one of my other chart, they said, see, he's got it wrong and he doesn't get any of this chart right. So the reason I'm saying this is not trying to harp on what individuals said, but to try and help you to understand my analysis. My analysis, when I put arrows down like this one, is not telling you exactly where the price is going to go. It's a schematic way of showing you the general trend. Now, when the price gets to here, or it might get to here, or it might even go further down, is really of no consequence. That's not the framework on which I am sharing my material with you. What I am helping you to see is that there are certain trends, and it's not important really necessarily when you start out with a general framework. Just like this particular chart that I started out, it's not necessary. When you're looking at a chart like this one, if you get a low at 200 or you get a low at 300, I know there's $100 difference, but in a scheme of this, $100 is nothing, right? So when somebody is saying to me that, by the way, I'll just close this one that I've commented on now. So when somebody comes up and says, for example, that you know you said 200, it never came to 200. It stopped at 280, for example. That doesn't mean somebody's analysis is wrong, because if somebody is able to predict exactly to the dollar, and these individuals who are critical of anybody's analysis except their own, and that's personally, I think, in my cynical view, I think they're too proud of themselves, so they only think their analysis is right, everybody else's analysis is wrong. Then for them, they have to come out and stick out an exact level and let everybody see it. And I think many of those individuals who have come and gone probably have not managed to do that. One individual said that, and he constantly keeps saying about statistical, odds. Statistical odds, price has never gone here. So, for example, when we were on this chart, his view was that we made this low, it came up here, and when we come back to this level, we have this dotted trend line, we had RSI back in that area, and potentially he was statistically, price has never gone beyond that. Well, we know what has happened since then. Price has gone well beyond that. So his statistical analysis is no longer statistical. So he may have to now review and maybe come up with something else. But the other thing is the statistical analysis, no matter what it is based on and no matter how clever it is, it's limited by the fact that Bitcoin has only got 2 or 3 year history. So when you see a 2 or 3 year history, you never really come to recognize a market cycle in different phases. And just to illustrate what I mean, I'm going to share with you a long-term chart of, if I can get the correct one, a long-term chart of Dow. Okay, this is the market that everybody looks at in the general equity market, and the price history on here we have going back to 1920s. Okay, so if somebody, for example, got involved in the market from this level, from April 1942. Then from April 1942 up to here, 1965, so from 40 to 65, almost over 20 years, he would have simply seen prices going, retracing, making new high, retracing. He would have been in a staircasing price action all the way for 20 years. And if his personal life experience was 20 years of investing, he would have never expected nearly 15, 18 years of sideways movement here. He would have never seen that. He would have never anticipated that. So his statistical analysis for the 20-year, he would have said it's always keeping up with that rising trend line. It's never dropped below that. But then we did here. And again, we took up another staircasing price action, starting off from 1982. But then that individual had never seen what's happened here. Since the top of 2000, we've had wild up and down gyration. And I was showing you on this charting schematic diagram that we may have one of the things could be this expanded flat. Now, there is a possibility that we've got something like that going on here, although I also think that there is another view. But there is a possibility because you see that the lows make, each lows make lower low, high make higher high. So it's expanding. So could it be that expanding flat, or is it something else? So all I'm saying is don't be biased and don't blink your eyes just because last 2-3 years in a Bitcoin has simply just gone one way. And any statistical analysis you do by very nature, analyzing a price chart of 2 or 3 years is going to be very limited. So take a bigger picture of things. Do recognize that market move in cycles, and that the cycle sometimes will antagonize you and will frustrate you, but it's something you should be expecting. And then hopefully you will get to know that market simply does not move in one direction. And there are times when market will do things that hardly anybody is expecting. But you should know that when you see something that market has gone for a long period, you should also expect a correction to last you for some proportional time. So let's get into the charting now. So I'll close this Dow chart now that you finish with you to take a bigger picture and do realize that you get a sustained trend for considerable period of time, and then corresponding with that move, you'll get a proportionate either a sideways move or move like that, but some kind of a correction pattern. So here we've had some complex, but a sideways, generally a sideways move, and here we've got either something similar or we've got something different in the making. So I'll close this chart now, and we'll now start off with this one and bring you to the current level. So we said in a previous chart and even today that we've entered into a correction period here. So if we are in a correction period from the November 2011, then what kind of a correction period are we in, right? So this chart you have seen me share with you many times. So many of you will readily agree with me that whatever happened here, it appears to me that is something like this here. And I'll make this one in green just to show you the swings I'm trying to refer to, okay? So you'll better understand overall what is happening and what we could expect, and not necessarily just one particular outcome, but maybe a couple of outcomes, okay? So what we see here is essentially on a log scale. So you'll see this one actually moving differently, but I'll resize them. So here we've got like a zigzag, okay? Now, if this was a complete zigzag cycle, like we said in this document here, like ABC as a complete cycle, then what we should have seen is we should have seen in this cycle clear five-way moves to the downside. Remember, we said if this is the first A, this one is B, then C must have 5 waves. And the very reason why we did not have 5 waves has been leading me to believe and often comment on that this low is not the final low. So somewhere along the way, this would be the final, or another low, this will be retested, or we'll get a new lower low. So when people find that, that new lower low hasn't arrived, they think everything I have said is not true and should be dismissed. But, time will tell. I have no idea exactly where the final low is going to be. I don't pretend to know, but we'll get there. So this particular cycle, because this leg was not a 5 wave, and many other Elliott wave analysts have challenged me and said this one is a 5 wave. They've said this one, 2, 3, 4, and 5 is down. But when I look at the individuals, it does not correspond to 5 Elliott wave counts, because just like the 5 waves you've said coming down here, in this wave C, you get 5 waves. Even within the each individual waves, you'll see a minor 5 waves, and that would be the signature. So that signature is not evident in this cycle. So this cycle simply now just becomes a zigzag. And I've said A, but we can call anything. Just like the schematic diagram in here, they've said A, B, C down, but because the C was not 5 wave, they call it this W, and I can call it W. So this one is wave A, but it did not have 5s. It simply had some kind of a complex zigzag. This one complex zigzag. In reality, that's what's happened. We got some complex zigzag for first cycle, complex zigzag for second cycle. So we can call it this A, or I can call it W, right? So when we have a W, then this becomes X. So if I was to say that I call this one W, then this is what it would look like. W, and then this one could become X, okay? So that would be one. And then if that was the end, then the next outcome should be, we should see, just like here, W. So if that was A, we should see C with a 5 wave. So let's walk it through. In this one, in this leg, so we had a W here. We've gone back up in zigzag with a first swing, retracement, and second swing. So it's a zigzag. We've gone up and we made an X. So if this was going to be a C, leading us to the final low in somewhere in this area, then we should see a 5 wave in there. And 5 wave should be very clear. It shouldn't be so difficult to try and identify. So to unexperienced Elliott wave analyst, they will say, here it is, wave 1, wave 2, wave 3, wave 4, and wave 5. We've got 5 waves. But I would disagree with them, because if this was 5 wave, then this would be wave 1. So when you look at the minor, if you drop down to, say, for example, 4-hour chart, then you should see clearly this swing should have 5 waves, because wave 1 is an impulsive part of a larger 5 wave. So wave 1 must have minor 5 waves. So if you look at this 4-hour chart here, yeah, starting off from there, you'll see it doesn't have 5 waves. You see, if this was wave 1, then it must have clear 5 wave within it. So you should see a clear 5 wave, and you can look however way you want. This is a very small retracement and very big down. Then you got some kind of a choppy up, and then again you get a 3 swing. So essentially all you've got is a swing down, retracement, and swing down. Then retracement, you get again a zigzag. So really this is like almost like a double zigzag. So if that's a double zigzag, it can't be wave 1. Then likewise over here, you see a drop, some kind of a retracement to the sideways, and then again you get a serious drop. But even in that drop, you do not get 5 wave down. So to me, it looks like this was a part of some kind of a double zigzag. This one is slightly larger zigzag made up of a drop, retracement, and a drop. And in doing that, I think it's completed a double zigzag to make a one larger zigzag. Okay, then see, likewise, we have here, we have a zigzag down, just like the first one here, zigzag down, retracement, and again zigzag down. So in my way of analysis, I think we've got a larger double zigzag. So this one forming a one zigzag, that one forming a second zigzag. Now whether we actually make up final low here or even drop a little bit lower, it's part of a double zigzag. And the other point to note, it's in this declining trend channel. It's quite clear So while it is in that declining trend channel, it is part of the same cycle. So that is different from this cycle down here. So this cycle, and I'll change the color of that to say turquoise color. So that cycle now becomes like this, like that. So that's the entire cycle. So what we have is we've got a zigzag down for this cycle retracement, and then we've got double zigzag going down in each zigzag also has a double zigzag within them. So if this is the case, then based on this schematic diagram, what we've got is just like that. We've got not a 5-wave pattern, but from the November high, we've got a zigzag down to make up this W. We got retracement, and we got zigzag down to make a wave Y. But unless we have a 5-wave pattern, we can't see this completing as an indicative of correction now completed. So what might turn out is this double zigzag will in the end might make up just one big corrective cycle. So what I mean by that is if this one travel any lower and gets to something like, come on, if this one gets, say this one continues dropping down and drops to this level, then what we've got is much larger. If I can squeeze that in, what we got is a much larger zigzag down. Okay, the big one from November high, right? So this one coming down is a zigzag down. Then you got retracement, you got another zigzag down. So the entire cycle would just complete with one a big double zigzag, in which case we've got basically, if that was the case, it's telling me then that we've got probably a much longer, more sideways choppy correction to come. However, at this moment in time, I'll go back to the daily chart on here. At this moment in time, I think what we got is this one here is clearly the first cycle down. Then we have a retracement. Now the retracement is whether it finished here or is it the one that could go on for longer. In other words, after this zigzag down, could this be a part of still a retracement back to the upside? Because in normal scheme of things, what we need is this zigzag correspond with that line. Then we should see an ABC. Now this would be the cleanest and easiest one to recognize. Okay, now we don't clearly have that here, because if we did, then we should be starting off with much larger and stronger wave C, and this wave C would have 5 waves to the downside. Okay, it should have 5 waves to the downside like that, but I don't think we have that. So what have we got in here? Is it possible that this particular square that we just drew is just the beginning of the retracement to the upside? So in other words, what we've done here is we've got a zigzag up and a zigzag down. So when you look at the schematic diagram here, what do we get? We get zigzag. You will have to invert this one to the upside. Okay, this one is a bearish pattern. So I'm not sure whether they've got one with the upside. No, they haven't got. So you have to flip this one. So what we've got is in here, we've got a zigzag coming down, zigzag going up. And if you flip it, then this is what we get. We get possibly, and I'll change the color of this one so you try and identify, make that one say big red. Okay, so what we have here is this is a zigzag ABC or WXY. Okay, so they got zigzag up and then we've got a zigzag down. So that zigzag down is one retracement, and that it should finish somewhere here. Okay, now if it finishes a little bit lower, it doesn't matter. If in fact we have gone a little bit, no, we haven't. We've done more than 88%, but we haven't actually done 100% retracement. But if it doesn't do 100% retracement, that's okay as well. So it's just a concept. So if anywhere in here, anywhere here, even if we get 320, I don't think we will, but even if we get 320, it doesn't really matter. But the idea is that this one is a zigzag up and a zigzag down. So if that is correct, if we have a zigzag and zigzag in two adjacent swings, i.e. in this swing and that swing, then what should follow is what you see here. What should follow? We should follow a strong five-way move. Now, I don't know whether we will or not, because it depends on whether we are interpreting this particular analysis clearly. Okay, so just go back to this one here is a three swing, and then starting from there again we have three swing. So if we get two swing, and if we get three swing and three swing, then this what comes out of that should be a fairly strong five-way move up. Okay, so somewhere in here we should find a low, and we should see a very clear five-way move up, and this is what it should look like. I'm going to draw it out to you. Okay, so we should see something like, now this is just the drawing, so don't say first swing you said is going to go to 490. It didn't. That's not what I'm trying to show. I'm trying to show you just the idea. So what we should have swing up, a retracement, a very strong third leg, maybe something like this, maybe a retracement, and possibly something like that, five-way move up. Okay, now if it did that, then what you might finish up using other technical analysis, not just Elliottwave, but other technical analysis tools, is you'll get essentially a retracement of his entire move down here. Okay, now you know what are the common retracement. It could be 50%. So we never quite made it to 50% of this entire swing down. So it could be 50%, it could be 61.8%. My perception is that these two are probably likely. 50% is very common, and so is 61.8%. But it is possible that the five-way swing could go up even stronger, and it could be something like this: 1, 2, 3, 4, 5. It could even go up almost back to the high, but if not, it could go up to there. The reason why I say there, 0.6% retracement, and also there is a significant, as you can see, significant previous structure resistance. So any of this is possible. So when you say that somebody's chart said 700, now it's gone to 800, you were wrong. Or somebody's chart show 850 and it stopped at 750, you know, that's not what we're talking about. We're talking about that concept of this being a zigzag, and we are in a form of retracement. So many people say, you were saying 700, it's never gone to 700. Well, who knows? This particular leg up could come to 700, could go to 750, could go to 800, could even go to 1000. But what we should expect after that, wherever that happens to be, whether it happens to be at this level, higher, or even here, we should then see a very strong downtrend. So some people have suggested that, you know, my 260, or whether it's 400 or 260, when are we going to get there, right? You know, not in my lifetime sort of kind of comments, but this is what we are looking for. So really this pattern overall has become quite complex, and it's going to take much longer. So if somebody was saying that by next March, April, we would be standing at 5 or 6,000. I think they'll have to review this and be very, very patient, because my perception is that we would probably not see this low maybe toward back end of 2015, maybe middle of 2015, back end of 2015. And who knows exactly what the time symmetry will hold out. So if you do a guesswork, just as a broad brush, to try and sort of get a general concept in mind, and say, for example, that from there to here on this daily chart, say it took nearly 300 days. Well, what is to stop this market continuing for another 300 days like that in this way? So in there, we will go up and will come down. Or we might actually spend a lot longer. If this is 300 days, 100%, we could do just like the price symmetry, that you can have 138%. This one could go on to something like that. We could, that's what I'm saying. We could see maybe middle of 2015 to maybe back end of 2015 before we will actually see a low. And I don't know where that low is going to be. I mean, there are rules that this here was, not rule, but what you call guidelines. You can have a deeper retracement, but it could be guidelines. So guidelines suggest that this spike low here was the beginning of this move there. And that was wave 4. So if that was a wave 4 for 1 cycle degree lower, so in here, that was this one here. This spike low in September 2013 was the beginning of this last cycle up. So when it corrects, it could easily come up to here. But if it did that, it would puzzle me a little bit, because we would actually break through this trend channel. Not saying that it shouldn't, but we would break through the trend channel, and that would be unnerving a little bit, because it doesn't fit the pattern. So we'll have to then modify our analysis somehow. And we could almost finish up where I'm saying here, like 85, which is where the wave 4 spike was in September 2013. So who knows? We could end up on this chart. We could end up going all the way to there. So I am being very cautious when I say 300 or 320, or even maybe dropping down to something like 200. I'm being very cautious, but it is possible for it to drop all the way there. And at this moment in time, I have no way of knowing. So you go with the least aggressive. Least aggressive is simply to retest and take out these lows whenever the low is found. Okay, so that could be around 280. If we find this recent low holds, and we then begin now in this up cycle, and you will know that this is an up cycle, and you will know because you will have a cycle going up which will be quite different. The price action here has been very choppy and very overlapping. You won't see that here. You'll see a clear 5-wave up, and you should see a reasonable, just like in this cycle here coming down, I showed you that we were getting like a declining trend channel. You see this trend channel here? You will see a similar trend channel going up, but you'll see a clear 5-wave where you won't see this kind of very choppy, overlapping, very spiky move up and down. You'll see a fairly clear 5-wave, relatively non-overlapping and quite impulsive. And many people might interpret that as a new bullish cycle, but because you heard it here, that is unlikely to be new bullish cycle. If I'm wrong, I will review it, but I think what we will see is this 5-wave cycle up. So if anybody is looking to get long on that and don't want to get long too soon in order to get trapped for any further decline, then this is what I would suggest. Is you see this clear downtrend channel we had? So essentially, you want to try and see price making higher and higher low to the upside, and you really want to see a break of that. So if you had a break of that, then possibly on a lower time frame, you could probably say once you have a break and you see a retracement, that retracement, you will have a 5-wave move up. As we said in that diagram here, you get 5-wave move up. Within that first wave, you should also get a minor 5-wave up. So once you get a 5-wave move up, then you'll see like a retracement, ABC. That would be the signature. So the strongest wave is a wave 3. That's the one you'll get wrong. And you'll then have, because when he retraces, say for example, if it goes up from here, if this was the low, say, so we're making an assumption, if this was the low, and say we head up in a 5-wave pattern up, and we go up to something like 460 or 470 or something. Okay, so once we've done that, so for example, this first swing, say we had that, so we now see this coming down. So when we see a retracement, we'll see a retracement like ABC sort of move. So we'll see like 3-swing correction like that, and it could be 50%, or it could be quite deep. It could be almost like 61.8%. So wherever it ends, you know that you had a 5-wave move up and you got 3-wave down. So now next cycle going up is going to be the one that is going to be wave 3. This is a wave 1, this is 2, and you'll be going into this larger cycle, wave 3. So you'll get long with your stop below here, and you will make sure that your position size is such that you it, and that you are expecting a much larger cycle up. So you won't be too quick to take your profit after $10 or $15 move, because in this area, that's what many of them have done. Some are very fortunate and of course swing like this one, but it's not always possible to catch a swing like that, no matter how clever you are, because sometimes these happen so quickly, or you might not be expecting it, and you are actually trading to the long side. So you will have, in this one, you're expecting the price to go up, so you'll have a stop over here. So by the time your stop is taken out, this is too far gone for you to short. It's too high a risk, and it will be like swapping train, like directionally changing your bias and jumping in. So you just got stopped out, so you miss smarting from a loss, and it'd be difficult for you then to say, okay, I'm going to change the course, and I'm going to take, because where your stop is going to be, structure high is there, stop is too far. So that's where some of our mates in the room have experienced unnecessary losses, because they try to catch a move, but really the move doesn't have a lot of follow through. So this would be the move. So if for example somebody has been exasperated in this one, this is the one to look for. So how will we know that we are in this new move? We will see this downtrend channel clearly break. We'll see RSI like it is showing here. See, recently we had a minor lower low. For example, the low on 19th of September compared with the low that we had today. If it holds, I don't know whether it will hold or not. I think it will, but I don't know whether it will or not. We'll have to wait and see. But if it does hold, then potentially on daily we have RSI divergence. Also, we've had a retracement of this 3-swing to the upside. We have a retracement of that almost like 88%. In fact, we've just popped just slightly below 88%. And I don't know whether some of you have ever read gun material. Like the Fibonacci, gun will also say like a 50% retracement. And instead of 61.8%, gun has 66.6%. In other words, 2/3 of the retracement. But he often talks about this 88% retracement. If you get to 88% retracement, then he reckoned that and if the market reverses, it will be very strong. And the reason why it will be very strong, because Elliottwave Wave tells you that you've got 3 swing up, 3 swing down, means that this one should, if we are correct on this, that's the proviso. If we are correct on this, we should see a strong 5-wave move to the upside. And that upside move, as a conservative, you will see an upside target of at least 680, because that's the last structural resistance to the upside, at least 680. And if you break 680, then you could be going much higher. I wouldn't be surprised if we get to something like 800 area, which is this area here, okay, but maybe even higher. And in fact, it would be really great if it makes it all the way to 1,000, because what it will do, it will bring in everybody who has given up on Bitcoin to go long, and they'll be going long once we break above here. and they'll be looking to ride that to the upside, and they'll be caught short because they get retracement, and they say, that's it, we're going up, and that's the one where they'll get caught, because market going to reverse in such a way that they've never seen it. In the last 2-3 years, they've never seen it. This decline will be so severe that this one will be just like kiddies play when it comes down here. Everybody who is currently now just about sort of hanging on, they'll all give up on this one. So that's my larger term expectation, is that in the short term, we're expecting low to form somewhere in the close proximity, or even going down all the way to 320. It will not change anything. It will still have this pattern I just outlined, still hold, and we should then be expecting for this new cycle up. So let me see now in the chat box if there's been questions before I go on to anything else. I mean, in general terms, I've finished really. But I mean, I will go over anything if there is a need, and if you have specific questions. So the question here, that wave countdown from July peak, why isn't it 5 waves? Okay, so the July peak is this one here. Why isn't it 5 waves? So let me leave this one here, and I will open up a new chart and answer that question. And it's a fair question because many people have interpreted that as a 5 wave. Okay, I think I did briefly touched on it, but I will go over it again. So I'll go down to the 4-hour chart. Okay, before I go into the 4-hour chart, let me just take this, hide that one. Okay, and bring in the RSI. There are many other different form of oscillators you can use, and I often do use, but RSI is one of my standard one. I always almost have that on almost every chart. Okay, so I put that over here. Right, now one of the reasons why this is not 5 waves, starting from here. Okay, that's the question. So the question is, why is this not a 5 wave? Well, one of the precept of Elliottwave wave, and is, it's not just a single factor. There are several things that we can look at, but one of the things is that in a wave 3, so in other words, when you're looking at here, this wave 3 supposed to be the strongest and the longest. Okay, generally. There are circumstances when it is not. For example, if you were in, let me see, if you were in, I don't think I've copied that pattern of here on here. Doesn't matter. You've seen me talk about falling wedge and rising wedges before. So if we were in a falling and rising wedge, so in other words, if this was a falling wedge, we'll be getting something like that, like that. Okay, so in this situation, it might not be what I'm trying to show you, which is wave 3 the longest and strongest. So in here, if you had something like this one, wave 3 will not be the longest. So you'll get wave 1 long, retracement. Wave 3 will be in between, retracement, and like that. Okay, so one of the rule is that wave 3 cannot be the shortest. So in a falling wedge, wave 3 is never the shortest because wave 5 is the shortest one, right? And in this one, wave 1 often is the most strongest because that's the longest and it's the one that carries the biggest momentum. And subsequent ones loses the momentum. That's why you get converging lines. So in that instance, it'd be different. But if it is a proper strong impulsive wave, then wave 3 will be the strongest and will have a highest momentum. So for example, it could move like wave 1, wave 2, and in comparison, wave 3 will be like that. It will be steeper than the wave 1, and it will be longer. You get a retracement, and you get wave 5. And what will happen is wave 5 will not be as long, and also wave 5 will lose the momentum. So general schematic diagram, this is what it will look like. You'll see wave 1 going up, retracement, wave 3 steepening the momentum to the upside, then retracement, and wave 5 losing the momentum. So it's not as steep as wave 3. So this one is the strongest. So when you see RSI, you will often see wave 3 the strongest. So let me explain to you here. See, in this bull run going back from 2012, you know, on my other chart, on this chart here, that this was a wave 3. Sorry, this was a wave 3 on this particular cycle here, this wave 3, which is April 2015. So in the same way, if we were looking at this, this one, then this was a wave 3. And see the RSI? Look at the RSI. This wave 3 was the strongest because it's demonstrated by the RSI. Okay, is the highest RSI on this entire chart, on a daily chart. It's the highest RSI reading. We've never got that far again, ever. And the reason why is because even though this looks so parabolic, actual net result of this was not as strong as what we had before. And this currently is an arithmetic scale, as you can see, right? If I put it in log scale, then you'll see that this move was really quite strong. Okay, so now you look at it. See, look, if you look at it, look at the way this is rising. Look at the angle, right, that it rose. Compare that angle with this one. Okay, you see what I mean? The wave 3 has a steeper and stronger momentum. That's why it's demonstrated by RSI being the highest reading. And then wave 5 loses the momentum, and therefore you get this divergence between the high of wave 3 and the high of wave 5. And that's where the cycle ended. So in the same way, if we go drop down to the smaller degree and look at this one, you'll see that we do not have the strongest momentum in a wave 3. So when you're looking at that, people will be saying, correct me if I'm wrong, they'll be saying this is wave 1, this one here is wave 2, this one is wave 3, this one 4, and then this here as a wave 5. Okay, so one of the reasons why this is not wave 5 is because if you look at that on a daily chart, you see at the moment this here, you can say is probably not, in fact it's difficult to see, but you'll see here, in fact, it's not the strongest. In other words, if you look at the RSI, right, if you look at the RSI, the low that we had recently is lower than the previous RSI. Okay, that's what I'm trying to say. So in that way, it is not demonstrating the divergence that we're looking for. So here we have actually an RSI looking like that, rather than wave 3. And the second thing you note also is, see here, you draw a trend line on the RSI. It looks like that trend line has clearly been broken. So what you might think really is this is one cycle retracement, and this is the second cycle. Okay, so if it was a 5 wave, you should see actually sometimes RSI will be having a similar kind of a downtrending channel on this particular cycle. So if you look at it here now, if this was wave 3 and this one 4, then this cycle must have 5 waves. Okay, so this one must have 5 waves. In fact, every impulsive move must have 5 waves. So all of these that I'm drawing here, this one should have 5 waves, that should have 5 waves, and this one should have 5 waves. So if you now drop down to say 2-hour chart, and let's see if it's got 5 waves, right? So in this cycle, we should have 5 waves, and there should be non-overlapping. That's the other point. There should be non-overlapping. So if you look at all of this here, they overlap. See, this one is first swing. Then see, all of these overlap that. Look, right? Overlap it. All of these come back into what? So they should never come back into this. If this was wave 1, they should never come back into wave 1 territory. So if this was wave 1, this is 2, and this is new cycle degree wave 3, then all of this overlapping is really questionable, that it is a part of a wave 3. And then the wave 3 look drop down here. So if this is questionable, then what is it? Is it a part of an expanded wave 2? So let's work with that premise if that was the case. So this one, say for example, become, so in other words, that we have this minor 1, all of this as wave 2, then we have a wave 3, then look at this one here. If this was wave 4, you should not get this kind of overlap. And then if that was the case, then in this last final, we should have 5 wave. Do we have 5 wave? And you can see quite clearly, you don't need an Elliottician skill. You can see quite clearly that there is this channel. Maybe you can reason and say this is 1, 2, 3, 4, and 5. So if that was 5, then what is this here? If that was 5, that means it's minor cycle 1, minor cycle 2. And if that's the case, then this one has a long way to go. This one is 1, 2, 3, 4, and 5. So that will finish up with a wave 3, a retracement, and another cycle down. That's how it should look like. Okay, so you finish with 1, 2, 3, 4, and 5. That's in the last piece. But in the earlier element, it's not right. And if this was wave 3, you don't get such a deep retracement into wave 3. And wave 3 usually has 38%, maximum 50% retracement. If it goes into something like this one, this is not wave 3, something else. And then if you look at this cycle, you can see in here what we've got. We don't have 5 waves in there either. We've got something that starts off from here to finish there. Okay, and then this one, you might say it has a 5 wave. You might say that it's got wave 1, maybe from here to here wave 3, and here to here wave 5. If that, I'm just guessing. So if that was the case, then it's got 1, 2, 3, 4, and 5. So that means this is one swing. So if that's a one swing, then we now have to understand what is it. Is it, how can you say that this one would be a minor wave 1, this would be minor wave 3, and then this entire wave 5. So wave 3 is actually not as strong as this wave 5. So when you start looking at the actual substructure, every one of them, it looks like a zigzag. And then the final test, this one here, this one you can see is again looks more like the strong leg down, and this entire looks like part of the same cycle. So if this is part of the same cycle, and without agonizing, you might say this is 1, 2, 3, 4, and 5. So if that's a 5 wave, then this is 1. So this is A, B, and C. So it's not a 5 wave in that sense. And you can't say that it's a 5 wave like here. You can't say this is 1, this is 3, and this here is 5. Because in this one, we must have 5 wave, and we don't have that 5 wave. You see, from there to there is, you can see it's almost like one drop, but then it's more horizontal, and then suddenly a second drop. So none of these waves that you see clearly shows that we have 5 wave structure in every impulsive wave to the downside. So that is the reason why it is not 5 waves. You know, all of these should have 5 waves. So if I now say just take all this away, clear everything, clear all the drawing tools, remove all the drawing tools. So if you want to go over it yourself, you can say, show yourself that this one's got 5 waves, this one's got 5 waves, and then this one's got 5 waves. If you can go and demonstrate that all of those cycles got a 5 wave down, and that they conform to guidelines that wave 3 never go back into wave 1, and that the wave 3 is supposed to be strongest and the longest, then you will find that it's not. And in fact, if you look at it, to me, it looks more like this. See this cycle here? looks part of the same cycle. Okay, and compare that with this one. Okay, so compare this, I think is one cycle. So I'm going to change that color to green. That's one cycle. And then whole of this is part of the same cycle. Because if you look at it, it's contained within the trend line, almost like that. And you got one spike protruding out. But other than that, that is a part of the same. So this to me is like one zigzag, two zigzags. So to me, like this is two zigzag down, and this is single zigzag, but it's not five wave. So I hope that answers your question. And for anybody else, within your long term, you have a low at 750 in 2017. Yeah, you see, don't focus on that, because I was just, when I'm trying to draw, um, uh, general sketch, it's not to the scale. It's a freehand drawing. So don't focus on the fact that it's going to 750 and then say to me, wow, your low point is dropping every day. So it's not, 750 is not the low. So if I go back to that chart I was showing you on, this chart, I'm not suggesting 750 low. You see what I'm suggesting? See, look, this horizontal line I've drawn. Okay, make it very thick, right? This horizontal line I've drawn is now suggesting at $80, because that's where the previous wave 4 was. You see, Elliottwave guidelines suggest now when you are correcting this, see this green line, you have what you I think you run ahead. You run ahead. The reason why you run ahead, we might, this is the freehand drawing. First of all, that's what you got to look at. It's a drawing. While I'm presenting this, I'm just drawing this, right? So it's not to a scale, and it's not to tell you exactly where the price is going to go. I am outlining the general path, and the path at the moment we are trying to consider is this one here. All of this is well into future. Maybe we are talking about 2017, might not be 2017. It might be that all of these might actually get moved across here. It might be like 2020, maybe. Who knows, right? So don't focus on to that. I'm trying to show you a general outline, and the outline at the moment is that if this cycle is correct, then we are looking for this magenta wave 3 top. We are looking for magenta wave 4, which could be here, or it could be where my red line is, could drop down to there. Once we've done that, that magenta 4 is finished. So then we have to go for magenta 5. Okay, so that's a magenta 5. Once the magenta 5 is done, then the square bracket wave 3 is complete. So if this is wave 1, I'm making an assumption. So we have no idea, because I don't know exactly what was here. And there is no way that anybody can actually tell me that, even though we combine price going back to 2010, it's still not clear what this is. So I am now making an assumption and working with my assumption. So because this is so far reasonably clear and a neat to me. So I'm making that assumption that whatever came from there was wave 1. This is wave 2 in square bracket. So we are now working on wave 3 on square bracket. So if we find that we find a low around 200 or 100 or 80, doesn't matter where, then that will be magenta 4. So in this chart, once we completed this one, that will be magenta 4. Then we will be moving up for magenta 5, and that could take us back towards November high, or maybe new high, or it might be what Elliott wave called truncated wave. And if it's a truncated wave, it will get so close, but it would probably not go out and touch the November high. It might stop short. So if November high was at 1200 or something, this one might just stop at 1200. It might be at 1180. Could be anything like that. So it's a broad area, and at this moment there is no way anybody can tell you where it's going to be. We might make a new high, we might make an equal high, or we might make a lower high. So once that is complete, then the square bracket is finished. Then we would come down and make a square bracket wave 4, And at the moment on a schematic diagram, and if the channel holds, then I'm looking at something like that, like 500, 600, or maybe 800, anywhere in that area, like here. And then we'll go up to complete this wave 5 in square bracket. And I don't know where that wave 5 is going to be. Is it going to be at, where I put here, 6,000? Is it going to be high, or is it going to be lower, maybe like 2080? I have no idea at this moment in time. And it's not something that even anybody in their sane mind should be thinking of, because it's not possible for anybody to tell you that now. And why would you worry about price going up there in 2015 when we are struggling to form a low? Why should you be talking about this one going down to here? Whether I put it there or there, it doesn't matter. So, unless you are sort of disturbed by why I put this one at 730, you shouldn't be focusing on that. But what you should know also is one thing, and that is, see here, right this moment in time, we've made 88% retracement, and there is nothing to suggest otherwise. Now, if you get a complete cycle, there is nothing to suggest that we might actually make 88% retracement or even 100% retracement. In other words, if this cycle, this peak cycle square 5 finishes like this, and say I don't know where that number 5, this square bracket will be, but let's say for argument's sake, we'll say 3,000, right? So if we get to 3,000, there is nothing to stop from then the correction to do this all the way to there, almost not more than 100%, but it can come to 100%, or it could do 88% or 90%, right? Or 95% or 96%. There is nothing to stop. And in that case, yes, it is possible. You could come to 7, you could come to 20, you could come to 30, or even 1, right? So, and if that one throws you out, then sorry, my analysis is not for you. Okay, and I don't think you'll have to rely on anybody else's analysis. You'll have to find your own particular method, because this is not something that's going to give you any real profit, or even justification of maybe looking at that. Because why should you be looking at this when you don't even know what this is going to be? So we are working with this one, not something in 2017 or 2018 or sometime, because we are not talking about that until we have the square bracket 5 finish. So a lot of uncertainty and a lot of time ahead yet before we get to that point. On the current leg down, you mentioned that we have a flat. Yeah, it's a possible flat. And count to the 5 waves. We now look at 3. So let me just say, but when you counted the waves just now, it looks like 3 waves. Yes, it is 3 waves. And do you think that we could go down to 260 on this leg? Yes, it is possible. So when we were looking at this one, let me take a lot of these things away so I can come back to the, maybe here. Yeah, over here. Okay, so what we've got so far, I think, and this is one possibility, is that this is first cycle up, and this one is a second cycle up. Okay, so that one is a 3 swing to the upside. And then likewise, I think what we've got is we've got a first swing coming up from there to here, and then this swing taking that. So this is 3 swings. So you got a zigzag down, retracement, and complex, like a double zigzag down. So when you get something like this one, then the question is, can you get to 260? So let me just draw this line here. So this is the horizontal line. So that's where the last low was. So if we have this price drop all the way to there, that will be like 340 or wherever that low was, 340 low. Okay. It is possible for this one to drop lower and take out that low. So if we had that, then what we will get, and by combination, the rule is that in the opposite direction, we could go to 138%. So I don't know where that comes. If I put my fibs on, I don't think it will, but if I put my fibs on and say, for example, like that, then if we have what we call an expanded flat, we could get 138.2%. Okay, so I don't know, that comes to 200. So even if we have that, even if this one gone all the way to there, it is not the wave C, because wave C must have 5 waves. So if this one goes down to there, that would still not be the ultimate low. It would then become like an expanded flat. Let me go to 4 hours. I can squeeze a bit more price on there. So what will happen then is we'll have what appears to be this part playing out. This one playing out, we sell expanded flat, where you have wave B up and wave C coming down. It goes down a lot further. So if you flip this to the other side, upside down, then on this chart, wave B, so if this is wave A, then this is wave B, and it could go all the way to 200, technically. But I don't think it will. And so far, we have yet to see the confirmation of that. But you see on, for example, RSI on daily chart, I know we've not finished yet, but if we do have a low anywhere near here, then potentially we are looking for RSI divergence on daily chart. If we then go onto the 4-hour chart, then you'll see also RSI divergence being suggested, not proved because we haven't got the low yet, but potentially we have RSI divergence being developed on 4-hour. So I think that it is unlikely we would see a price dropping that far. I think somehow the price will be halted before it gets there. And we've said also that we have dropped down to 88%. So if you make this one 88%, I mean, in Gann's terms, and also Elliottwave Wave, see 88% retracement. An 88% retracement often marks an end of the counter trend rally. So at this moment in time, my bias is, and this is my bias, right? I could be wrong, but this is my bias. So I'm expecting a low to form somewhere in this zone, And until the price actually leaves this declining trend channel, I have to expect that we will be going further lower down. But I have a reason to expect or anticipate a low being formed in this area because we have potentially an RSI divergence. We have 88% retracement. If I now put on the volume to see whether there is an evidence of possibly selling pressure drying out. So in other words, you use several different things, not just sort of like a one particular mean like a Elliott wave. So if you look at it now, we are trying to examine this cycle here. So in that cycle, when we were making a low, this low, see where the price was, or rather the volume. So this thrust down had a significant high volume. So you can see at the moment that we are nowhere near there. Now that doesn't mean to say that we will never get there, because if this selling pressure drop here, I can see a lot of stops being triggered and this volume could begin to rise sharply. But at the moment, there is nothing to suggest that the volume is getting there. So in other words, we have a lower low, but the volume is dropping off. That means to say that whilst the low is coming, the clever money has probably taken out people stops from weak hand. So people who long, they might have now given up, and they might have stopped just below that. It's been taken out. So only thing we can expect is if the low is formed, then there is a divergence on the volume on this selling pressure is less than the selling pressure on the previous decline. We have RSI also suggesting the same, that the momentum is dying out. And also, if you look at the way in which the price is behaving within the channel, right? So here, for example, you had price go like that. I'd say like that. And then it suddenly took up the strong momentum downside. And then look at this one, and it did the same again, right? But now, instead of coming to the bottom of the declining trend channel, so we had here, and spiked below just the channel, we are now further away from the bottom line. So it's possible now, maybe price would go sideways, maybe even decline a little bit, but eventually price will probably go well toward the right and possibly shift out of this declining trend channel. So I'm still expecting a low to form somewhere in the recent low. Either the low is in already, or it could be coming down. But one reason to expect a low is because 78% retracement. There are other Fibonacci's as well. For example, if you do this one, get the correct Fibonacci, this one there. So we are saying from this swing here, and we haven't got 1-to-1, but we probably got 1-to-161 or 178 is a common replacement. What happened there? Oh, clicking on wrong button. So 61, okay. Right, so you can see that we've dropped just below the 61.8%. So in other words, if you measure this leg compared with that one, so far it's gone below 61.8%. If it fell below that and it comes to 78% of the first leg, then we are looking at around about 360. 360 also in Gann number is quite important because it's like a, in a circle you have 360 degrees. So when people talk about round numbers, sometimes the round number could be 350, but you can see here is close to 360. So that could be another reason why, if the low is not already in at 375, we could possibly have a low around 360. But we've no way of telling for sure. You can do a smaller trend channel, and that could be this one here. Right, so just like this larger trend channel coming down, if you see price now, for example, beginning to struggle going down and it moves out of this, then it means whatever this leg is, we don't know what it is, whatever it is, it's finished. So at least what you would then expect is for this one to maybe move up like that and then mount another decline. That's possible because then you finish up with this one being double zigzag, this one being double zigzag, and it's possible for it then to decline all the way to there, to either 360 or maybe even lower. Maybe even take out that previous low of 340 and drop down to something like 300. And in that case, it would definitely become what we have an expanded flat. But the reason why I think that's not likely to happen, because here you finish up with a triple zigzag down. So you go first zigzag, second zigzag. So second zigzag is made up of so from there, I think this entire move is a second zigzag. But if we had a third one, then it means this is a second zigzag, and we'd expect another one again like that down here. And it's very rare to get like a triple, it's not impossible, but it's very rare to get triple zigzag in a declining or even a rising market for as a form of correction. Triple zigzag in a correction, not impossible, but it's very rare. So that could be another reason why I don't think we'll drop down that far, like, below 340. I think 340 should probably mark the end. But we probably got the low already, I think. Like this one. Yeah, I can see that. Let me just expand that a bit. Yeah, well, first of all, I would say that your wave counts is completely wrong. You cannot count, as I've just showed you now, you cannot count that as 1, 2, 3, 4, and 5. Not possible, because we've gone over the reason why this wave 1 is not wave 1 with the 5 waves in them. Neither is wave 3 with a clear non-overlapping 5 waves. So no, it's not possible. But if we do go down, it will be another zigzag. Okay. Yeah, you can apply. I mean, you can forget the assumptions. I agree. So you can go on basically on a supply and demand zone. Yes, that's correct. But then, which one of the supply and demand zone and what time frame would you focus on? So, for example, if you're looking at this one here, and if I take all the drawings off, okay, and let's go into the larger degree daily chart. So we are looking at genuine big supply demand zones, and we're on a log scale, which I think is correct also. So you see, if for example you look at supply and demand zone, then commonly there are a couple of different variations of supply demand zone depending on where you learned the supply and demand zone from. But people might say, look, that's a support. Oh, wrong tool. That's a support. So potentially that and that. Okay. So because you had a spike low, and then another one spike low. So potentially that could be a zone. So if that is a zone, on the downside, that's a potential supply. If that supply is not supply but demand rather. So if that demand is satisfied, and everybody who wants to buy have already bought, so the demand is finished, but there is still more selling to come, then where is the next supply and demand? Well, when you look at it here, I mean, there's a minor one here, only a minor one, maybe a little bit more serious one over here, right? Uh, so you begin to think to yourself, where is it? Is it this one? Could it be this one? So where will you go? And in terms of Elliott wave, yes, because Elliott wave has a certain approach. One of the things that Elliott wave also considers is fib ratios and trend channels. So in this particular case, if I was looking at this and which particular supply demand zone I would focus on, so get the right tool, trend channel. So for example, this one here, okay, so that's a trend channel, and we've had like that, for example. Okay, so in this particular case, I would expect that we would, this is the baseline of the rising trend channel, so we could come back to the baseline. But if we came back to the baseline, then which supply zone would you look at? I don't know whether it would be this one. The only thing you could go by is a guideline that Elliottwave Wave says that once a cycle completes, you could have a correction back to a cycle low of the 1 cycle degree lower. So in other words, we are completing cycle from here going up 5 waves, and within that 5 waves we have done already 1, 2. Okay, then this one is 3, because within that you got 1, 2, 3, 4, and 5. Okay, so it's got so wave 3. Now we are in a wave 4. So within that wave 4, the previous cycle degree wave 4, it was this one here, which is where everybody were trying to draw the trend line and found that that was supposed to hold, but it did not hold. Okay, so that's a low. So that's why I'm saying it is possible before this particular correction finishes, somehow we could get that far. But when will we get there? Will we get there right now? Or are we likely to do what I suggested, that we will probably find somewhere in here low, then the market goes up like that and then drops either back to that zone, or maybe to one lower zone here, or all the way down to there, right? So Elliott wave could work, but supply and demand zone by themselves uh, can't be that useful, because in order for you to have a supply and demand zone, you need the price action on the left hand side. So that means you need a price action traveling from here, going up to there, and supply and demand zone will be in between. So what do you do when you, for example, in a new territory? Would you say that there is a demand all the way? Because if there was a demand all the way, at some stage demand will exhaust and we'll get a correction. So when, for example, when the price broke out over here, what did people think? Did you think, for example, there's so much demand, and hence the price is going up, that it, because there is no supply. There is no supply. So once we were in blue sky, there was no supply. So if there was no supply, why did we ever get this retracement? So I think supply and demand zone is useful, but on its own, like any approach, any technical analysis approach on its own can't necessarily be enough. Can't be enough necessarily. You have to bring in few other things, uh, like, for example, the momentum oscillators, Fibonacci's, trend lines, channels, horizontal supports, and within that framework, see if the Elliott wave structure supports either a bullish or sideways corrective, or a bearish move. Um, I don't necessarily um, base everything just on Elliott wave, because there are times when, yeah, I can't make head and tail of which way the waves are going, and when that is happening, that it's a corrective wave, because in an impulsive either down or up move, there should be clear waves. So if you're not in a clear wave, then we are in some kind of correction, and if you're in some kind of correction, unless very clear, best thing would be to stay out. Personally, I think best thing would be to stay out until things become clearer. Then you will get into a trade, and you may be that you miss some action in between, but you can be sure that you've also missed out all the stress, headache, and potential losses in between. Okay, so any more? We've gone. Um, well, it's coming on to 2 hours again. So unless if there's any serious question, I was just going to highlight one more alternative. We've said we've got potential flat and we're looking for a five-way move up, but there is another alternative which we have to keep in mind. And I'll just quickly show that, and then we'll conclude. And if there are any other important questions, then post them and I'll look at them in a second. You have seen me also share this chart with you. This is a Finex chart, and the reason why I'm using this one is because of this spike low, which everybody says I should ignore. But if I'm not going to ignore that, then I think what is happening here is like the previous one. We saw a zigzag down, so we can call that either a wave A or wave W. It's not important at this moment what we call it, but it's basically a double zigzag. So it finished first cycle. So that cycle is now complete by this. Okay, so now we are somehow retracing that. So one of the way of retracing as an alternate to a zigzag, going back up like that, is a possible triangle. So if this is the triangle, then from that spike low, we had the price rally all the way to there. So if I take this off now, just to clarify, we had this spike low, this spike rallied all the way to there, dropped down, and went up again. Again, you can see a zigzag. So possibly this zigzag is the first zigzagger. And one alternative to a simple zigzag is this. We could get like that, which is what we've got here, where I've got in magenta wave A in bracket. Then what we could have here is like a triangle, like that. And what happened there is you get wave A. Let me just change the color of this one to something a bit more different. Oh, that must have done some. Okay, so we have a triangle, and in the triangle you need 5 points. So we got wave A, for example, here. So that would be there, wave A. Then we come down to form a wave B. And again, I think that is a very serious possibility as well. And that's the reason why, if we don't get the clear 5 wave to the upside that I just outlined on my previous one, then we could get this one. Like that. And then at the conclusion, we would then start this leg down that we're looking for. Okay, so what happens is you get wave A, which is there, wave B, that's this one here, and wave C is that one there, that's wave D, and we could go up to E. Now if that happens, then the triangle defines where the next high swing is going to be. So in this particular case, it looks like we could be topping somewhere around about 600 as a round number. Okay, and one of the signature of this triangle is every swing as a part of the triangle has 3 swings. So in other words, what it means is this. We should get in there something like that. And again, this is not to the scale, this is simply to illustrate something like that. Okay, so every swing has 3 waves within them. And at the moment, it is quite possible, I think, we could get that too. And certainly the Finex seem to suggest that. So Bitstamp might also fall into that. Okay, so you look at that, every swing has 3 swing. So from the spike low, we've done 3 swing up for wave A. For this coming down, in my view, this is not a 5 wave. In my view, this is a zigzag coming down. So it would be just like that. Then going up is a 3 wave zigzag. Coming down again is a 3 wave zigzag there. So in which case we are bottoming to form this point D. In which case we'll see a zigzag. We won't see the 5 wave strong move up that I try to illustrate on this chart. For example, we won't see that. So if we don't see that, it doesn't mean that the Elliottwave wave is not working, and it doesn't mean that I've got everything wrong, but that's the reason why, is we might not see the strong 5 wave move up, but simply we will see an overlapping zigzag. Now if that happens, then you know why. We've got a triangle forming like that, and therefore we could come back toward around about 600. It could be slightly short. It could even get a spike high, maybe into 640 or 650, and then drop. And when it drops from the triangle, we will be looking for definitely 5 wave to the downside. If the triangle happens here, then what we're looking for is clear 5 wave to the downside to complete this final correction, which started from November high. We'll complete that whenever we get 5 wave to the downside, if it's a triangle. If it's not a triangle, then we'll see a 5 wave to the upside. When that finishes, then we'll move it down to form the final low. So that's the other alternative. So all done. Thank you, my pleasure. Count. Okay, let me just have a look at that count. A, B, C to form a D. Then you're coming down for an E. If this is C and that's D, then this would be E, you're saying. So I'm not sure how that fits in. So if you're saying that this is the E, then I assume what you're doing is you're saying that counting is that this is A, this is B. Because if this is E, then your counts have shifted. So the only way, okay, so you must be saying that this is A, B, C, D, and E. Now that is not completely impossible, but I think that's highly unlikely. In other words, for you to have a triangle like this, one can never dismiss it, but I think it's highly unlikely for a triangle of this sort. That's what you're saying. Okay, so we have a wave A, wave B, C, D, and E, and if that was the case, then you would see the resolution of this one to the upside, like that, and that would completely mix up everything, because if you had this wave A, this triangle as a wave B, then this is wave C. Then what you would expect is another big decline like that. If this is B and is bullish from your point of view, then we would break to the upside and we would then complete that wherever, not necessarily that high, but maybe something like here, like that, and then come down. So I wouldn't say it's completely impossible, but I think it looks very strange for this triangle to be like that. But when you got too many overlapping and too many three swing, sometimes it's a bit difficult to know exactly what until almost toward the end. So, but either way, even if that was the case, we would be expecting a potential low in this area, and we'll be looking for a bullish move to the upside. So either we got a strong bullish move to the upside with the 5 waves, or we have this one that I just laid out, with possibly going back towards 600 somewhere on this year, about 600 somewhere, for a bearish triangle rather than a bullish triangle. So that's it. Thank you all. Hope you enjoyed it and you found that useful and practical. And leave you now to get back to your analysis and your trading. Any comments and observations, you can continue to interact with me during the week in the main TradingView chat. And this recording, hopefully Google recording has taken place and is good, and it should be available for you to go over and review in your own leisure time. Thank you. So with your permission, I'll conclude the live session here. Thank you for joining me.